Hey, happy COVID Sunday. It's time for Wall Street Winners. What you've been waiting for all week long. You've been sitting there. You've been sheltering in place. You've been saying, God, I wish I could get some Wall Street Winners going. Well, here I am to deliver to you what you've been waiting for. Hey, everybody. How's it going? I love sheltering in place. No, wait a minute. I hate it. All right, let's take a look. Everything continues to move in the bullish direction. I still remain very nervous about this rally. My biggest concern is that the full effect of the global economic lockdown by governments has yet to be discounted in the stock market. That's a deep, heavy, fundamental statement. Another thing that concerns me is the decline in volume as we rally. As you can see, we had an increase in volume on the decline back in February and March, and a decline in volume on the rally. Normally, that means that the volume is not confirming the bull move. Makes me very nervous. So I have two significant reasons for being nervous. Having said that, all other indicators are bullish right now. So our job is to make money. Our job is not to be right. Our job is not to be smart. Our job is to make money. The way you make money right now is to be on the long side. But we need to be nervous. We need to be nervous and we need to be ready to pull the trigger on the short side. But right now, it's too early. Let's take a look right here. You can see in the upper right-hand corner, the little green line shows that buying pressure is increasing, selling pressure is decreasing. But notice that they're not that different. The buying pressure and the selling pressure are actually pretty close. Now, the black line is the ADX, and that's really a far more important line than the little green and little red line. And what it's saying is we're actually still in kind of a neutral mode. So you can see back in February and March, the ADX was going up, which confirmed the bear market. Then we got the move down in the ADX starting towards the end of March. And since that time, the ADX is saying we're not really in a trendy market. So what we're looking for here, and it'll take weeks before this happens, is we're looking for the ADX to move up. Now, when it starts to move up, that means whatever the price action is what the trend is. So if the stocks are still moving higher and we get the ADX to turn up, that gives me a lot more confidence that we're actually in a bull market. If the ADX moves up and the price starts to move down, that gives me a lot more confidence that we're in a bear market. Moving up is what we want the ADX to do to confirm whatever the bull market or bear market is. Once we get that confirmation, we can be far more aggressive in the market than we are now. Okay, similar situation. Look at the volume. Except notice that lately the volume is perked up here on the NASDAQ. And notice the explosion in the purple predictor, showing that the smart money is coming in and buying the NASDAQ. Let's go back to the S&P. Smart money, not really buying it. It's just the smart money and the dumb money are doing the same thing. But here in the NASDAQ, the smart money has been more bullish and is really starting to buy aggressive. So that tells us where we need to be. We need to be in medical technology. We need to be in technology. We can't be in old, boring stocks. Now, in addition, I think that a lot of this buying in the NASDAQ is coming in because of buying companies like Gilead and some of the stocks that are in our portfolio, Teladoc and people like that, because what they're doing is they're saying, hey, this COVID thing is really boosting the demand for stocks that can make money in an environment where we're all locked down, where we're sheltering in place. I hate that term. All right, seasonality, neutral at this point. Well, you can see it's going to be neutral until really towards the end of May, and then we should start to see some more significant movements to the upside. Yield curve, really not a big, we talked a lot about it last week, so I won't talk a lot about it this week, but stabilizing, still not bullish in my mind. Doing exactly what I told you would do last week. We're just going to see the VIX continue to move lower. Now, asset allocation, we talked about this quite a bit last week, but I'm going to add to it this week. And you can see that what's happening is people are bailing out of bonds. So what we're always looking for is we're looking to see where's the money coming from. Where's the money coming from and where's it's going? This type of flow of funds analysis on a daily basis is unique only to Wall Street winners. You cannot get this anyplace else. So here we can see that what's happening is that the people are moving money out of the bond market and into the stock market. They're getting away from the safety of bonds and looking for the riskiness or the profit potential in stocks. There's another aspect going on here as well. You see, with treasury note yields, I should say, down around 1%, I can buy a lot of Dow stocks and get 3%. So what's happened is with this sharp decline in interest rates, it's created an increased demand for high dividend stocks. Stock market risk indicator, wild action here, but let's say stability. They're not looking for a lot more risk. They're not looking to hunker down. They're just saying we want to be in the stock market. We're okay with the amount of risk that we have in the portfolio right now. Now, when I showed you the NASDAQ chart, it showed that the smart money was looking for more risk. So that's interesting to me. Smart money is looking for more NASDAQ type risky stocks, but the overall market is not looking for additional risk. Global shares, a lot like the U.S. market, so not that interested. Bonds, you can see they moved to a slight new high here on Thursday and Friday, but then gave up some of those gains on Friday. If we're going to continue to be locked down, I look for bonds to go back up to that 180 level. Now, we are seeing some notes that, for example, Texas and Alabama are going to be opening up a bit more this week. But that's a drop in the bucket at this point. Alabama is obviously a small state. Texas is a big state, but still no big gatherings, et cetera, et cetera. But still, it's a step in the right direction to keep us from being in a depression. We're obviously in a recession. That's a done deal. And I really think we're borderline depression. It looks to me like we are not going to see significant opening up of the U.S. economy until May. So that's another couple of weeks to go. That should get us down into a depression level contraction in the economy. I don't think that's fully factored into the bond market. Bond key factors, we haven't looked at them in a little while. The top one is the gold line. That's the price of gold. It's saying we should see higher interest rates. Then the middle one, the chart itself, that's the CRB. It says we should see lower interest rates. The blue line is 10-year treasuries. It says we should see stable interest rates. And the green line is 10-year treasuries, which are stabilizing near this level. Dollar, very stable. But notice that we're in a pennant formation. In other words, we're making lower highs and higher lows. So I think we're about to see a major breakout in the dollar. And we're going to want to follow that. We're going to want to do some trading on the dollar, depending on which way it breaks out. Gold, it's a bull market, but it's a very, very weak bull market. Obviously, we're correcting right now, but still in a bull market. I am long gold, but I'm not real enthused. Our gold key indicators, 2 out of 3 are sideways, and the one that's bullish isn't that bullish. So, and for fully paid up members, what our other indicator, I'll show you what our other indicator, our most powerful indicator, is doing for our fully paid up members. Crude oil got a nice little pop here on Thursday, still in a trading range between $20 and $30. I guess the price war's still on. U.S. frackers are being decimated. The oil patch is being decimated in the United States. We're starting to see more and more bankruptcies every week. But there's a lot of political pressure to try to get some type of stability in the marketplace, and not at $20, $40, $50, $60. Now, I don't think the Saudis and the Russians will allow it to be at $60, because at $60, the Americans will come back in and start to pump out a lot of oil. But if they could get it to $50, that'll keep the Americans out of the market, but they'll make double the amount of money they're making right now. I should say they make more than double, but at least they'll gross at least double. Pretty much I'm on the sidelines with Bitcoin. Purple Predictor is looking a little bit better here, but there's no significant trend, so I think it's better to be trading other things. All right, freebies, you know we love having you. Fully paid up members, hang on just a second. Hey, freebies for Wall Street Winners. Really appreciate having you here and love to have you participate in the Wall Street Winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature, that's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.